Welcome students, I'm Dr. Vijaya, Assistant Professor. Today we are going to see unit number 12, Stock Exchanges. It's from Block 3, Capital Markets. Introduction about stock exchange. A stock exchange facilitates stockbrokers to trade company stocks and other securities. The stock may be bought or sold only if it is listed on an exchange. Thus, it is the meeting place of the stock buyers and sellers. India's premier stock exchanges are the Bombay Stock Exchange and the National Stock Exchange. A stock exchange securities exchange or BOUS is an exchange where stockbrokers and traders can buy and sell securities such as shares of stocks, bonds and other financial instruments. Stock exchanges may also provide facilities for the use, issue and the redemption of such securities and instruments and capital events including the payment of income and dividends. Securities traded on a stock exchange include stock issued by listed companies, unit trusts, derivatives, pooled investments, products and bonds. Stock exchanges often function as continuous auction markets with buyers and sellers consummating transactions via open outcry at a central location such as the floor of the exchange or by using an electronic trading platform. Stock exchange meaning. A stock exchange facilitates stockbrokers to trade company stocks and other securities. A stock may be bought or sold only if it is listed on an exchange. Thus, it is the meeting place of the stock buyers and sellers. India's premier stock exchange is the Bombay Stock Exchange and the National Stock Exchange. Definition of Hastings. Stock exchange or securities market comprises of all the places where buyers and sellers of stocks and bonds or their representatives undertake transactions involving the sale of securities. Definition and Goodman and Dougal. The organized security exchanges are marketplaces open only to members, most of whom are brokers acting for buyers and sellers of the stocks and bonds permitted in the market. Definition in the Act. The Securities Contracts Regulation Act 1956 defines a stock exchange as an association, organization or body of individuals, whether incorporated or not, established for the purpose of assisting, regulating and controlling business in buying or dealing in securities. Features of stock exchange. A stock exchange is an institutional arrangement. In stock exchange, shares, debentures, bonds, securities, etc. are transacted. The stock exchange is equally important for investors and for the companies. Being an organized market, it has some features. Some of the features are as follows. Formation and management. Stock exchanges are generally limited company. The elected shareholders manage the stock exchange. Besides, a government can form this. Though the government established this exchange, it also forms a regulatory authority for this purpose. Organized market. It is an organized market located in a place. The stock exchange has specific authority to regulate the market. There are some specific rules and regulations regarding the stock exchange. Like instruments or products of share markets are shares, debentures, bonds, etc. of listed public limited companies which are traded in the market. Secondary market. It is a secondary market for financial instruments. In stock exchange, shares, bonds, securities are exchanged as products. The fluctuation of price. In the stock market, price of the products fluctuates, which is depending on the demand and supply. It is an open market where the price mechanism acts for determining price for such financial instruments. Certain rules and regulations. Every stock exchange has certain specific rules and regulations for performing transactions. If someone wants to trade in the stock exchange, he or she must obey certain rules and regulations. These rules and regulations are for both buyers and sellers. Specific location. Stock exchanges are located in a certain place. In that place or in a building, official activities are performed, but it is not mandatory to go to the place to buy or sell stock or other products. Through the online systems, one can easily buy and sell the instruments. All the working of stock exchange is conducted and controlled through computers and electronic system. Membership. To be a member of a stock exchange, one must have to buy shares. For this, he or she has to pay certain fees. Besides this, he has to sign an agreement to follow the rules and regulations of the stock exchange. Transaction through broker. In the stock market, no individual is permitted to transact directly. One must have to do it through the brokers of the stock exchange. Nature of the transaction. Transaction in stock exchange may be in cash or on credit. In the case of cash transaction, the payment is done within 3 or 4 days. In the case of credit transaction, the advance agreement of the payment is made within 15 or 30 days. Proper authority. Stock exchange are owned by the general shareholders, but proper authority regulates the stock exchange. An investor has to take their help to sell and purchase. No separate entity. Though stock exchanges are established as a public limited company, no transaction is made in the name of the stock market. Rather, the members of the stock market perform the transaction in their own name. Membership qualification. To be a member of the stock exchange, one is to be mature, financially solvent. A solicitation of any member of the stock exchange is also required, but there is no restriction on the educational and professional qualifications of members. Board of Directors. Every stock exchange has its board of directors elected by the shareholders. The board of directors is liable to the shareholders for their activities. A time limit of transactions. In a stock exchange, time is limited to completing a transaction. Within a certain time period, a transaction must be completed. Publication of daily report. Stock exchanges publish a daily report on the transaction of a regular interval. The publication may be in printed form or online. Listing. This is a new term in the stock exchange. To issue share in a stock exchange, a company has to be listed on the stock exchange. Without listing, a company cannot issue share in the stock exchange. All the transactions in securities at the stock market are effective through authorized members only. Profit and loss of members. The stock exchange does not involve in trading. The members of it make a transaction in a stock exchange, so the profit or loss of the member does not affect the market. From the above discussion, we can say that it has different types of features in which stock exchange can conduct the activities on behalf of its members. Objectives of stock exchange. The stock exchange is the index of the economy of a country. It is a center for the capital market. It is called the economic mirror of a country. It is called share market interchangeably. In developing trade, commerce and business and industries in a country, stock exchange plays an important role. The objectives of establishing a stock exchange are mentioned below. To supply capital. The main function of a stock exchange is to help companies elevate money, that is to enhance money or to improve the level of money. It is established to supply the required capital for companies of a country. To achieve this task, ownership in a private corporation is sold to the public in the form of shares of stock. Funds received from the sale of stock contribute to the firm's capital formation. To inspire savings. This inspires people to save their income by making a profit. The stock exchange helps in determining the prices for various securities. Continuous purchase and sale of securities on a stock exchange lead to the evaluation of their prices. Regular dealings reduce wide fluctuations in prices. It accumulates the individual income and yet they go to the industries, to the economic development of our country. To trade financial instruments. It is established to trade the financial instruments for individual investment and company collect capital. It provides a regular meeting place where people can convert their money into securities and securities into money. Buying and selling of securities are confined to one particular place and the investors are saved the trouble of going to different places to buy or sell securities. To develop economy. It helps economic development by supplying the capital to the industries. Unregulated markets can have an unenthusiastic impact on capital formation. Close regulation of stock exchanges allows strangers from all parts of the world to honor contracts executed in the daily trading of shares. It is an important objective of the stock exchange to present information. Another objective of the stock exchange is to present information about transactions and financial conditions of the company. It reflects changes taking place in the country's economy. Price trend Sun stock exchange indicate trade cycles, that is boom, recession, depression, recovery, etc. To do long-term financing. Commercial banks generally disperse the short-term loan. So, supplying long-term finance is an objective of the stock exchange. Any company which wants to get its securities listed has to submit to these rules and regulations to raise awareness. It raises awareness among the general public by giving information than to invest and gain profit from the market. Thus, stock exchanges exercise a healthy influence on the working and management of companies. To have a fair operation, to transact the financial instruments easily and fairly, stock exchange is established. A stock exchange channelizes the investable funds in more productive industries. A company with a better performance and prospects has no difficulty in raising its capital. So, it is a duty of stock exchange to secure both investors and borrower, to protect fraudulently. It is also to ensure that no fraudulence occurs in a transaction. A stock exchange functions exactingly according to established rules and regulations. These rules and regulations provide a check on overtrading in securities and manipulation of prices. Convenience. The objective of the stock exchange is to formulate policies for easy transactions and the safety of the investors and companies. A stock exchange informs investors which way the investment wind is blowing. By directing the flow of capital into worthwhile projects, it gives an impetus to the economic development of the country. Security and transparency. The lawful sale of stock or any exchange requires dependable and correct information. By requiring a high level of transparency from all trading companies, the stock exchange creates a more protected environment for investors, which helps them to verify the risk of investing. So, the objectives of the stock exchange are great, and efficient operations of stock exchanges are so much required for the economic development of a country. Functions of a stock exchange. Economic barometer. A stock exchange is a liable barometer to measure the economic condition of a country. Every major change in country and economy is reflected in the prices of shares. The rise or fall in the share prices indicate the boom or recession cycle of the economy. Stock exchange is also known as the pulse of economy or economic mirror, which reflects the economic conditions of a country. Pricing of securities. The stock market helps to value the securities on the basis of demand and supply factors. As securities of profitable and growth oriented companies are valued higher as there is more demand for such securities. The valuation of securities is useful for investors, government, and creditors. The investors can know the value of their investment, the creditors can value the credit worthiness, and government can impose taxes on value of securities. Safety of transactions. In stock market, only the listed securities are traded, and stock exchange authorities include the company's names in the trade list only after verifying the soundness of the company. The companies which are listed, they also have to operate within the strict rules and regulations. This ensures safety of dealing through stock exchange. Contributes to economic growth. In stock exchange, securities of various companies are bought and sold. This process of disinvestment and reinvestment helps to invest in most productive investment proposal, and this leads to capital formation and economic growth of the country. Spreading of equity cult. Stock exchange encourages people to invest in ownership securities by regulating new issues, better trading practices, and educating people about investments. Providing scope for speculation. To ensure liquidity and demand of supply of securities, the stock exchange permits healthy speculation of securities. Liquidity. The main function of stock market is to provide ready market for sale and purchase of securities. The presence of stock exchange market gives assurance to investors that their investment can be converted into cash whenever they want. The investors can invest in long-term investment projects without any hesitation, as because of stock exchange they can convert long-term investment into short-term and medium-term. Better allocation of capital. The shares of profits making companies are quoted at high prices and are actively traded, so such companies can easily raise fresh capital from stock market. The general public hesitates to invest in securities of loss making companies. So, stock exchange facilitates allocation of investors' fund to profitable channels. Promotes the habits of savings and investment. The stock market offers attractive opportunities of investment in various securities. These attractive opportunities encourage people to save more and more invest in securities of corporate sector rather than investing in unproductive assets such as gold, silver, etc. Listing of securities. What is meant by listing of securities? Listing means the admission of the securities of a company to trading on a stock exchange. Listing is not compulsory under the Companies Act 2013 and 1956. It becomes necessary when a public limited company wants to issue shares or debentures to the public. When securities are listed on a stock exchange, the company has to compile. The major objectives of listing are to provide ready marketability and liquidity of a company's securities, to provide free negotiability of stocks, to protect shareholders and investors' interest, to provide a mechanism for effective control and supervision of trading. Listing requirements. So, what are the requirements we need for the listing in a company? A company which desires to list its shares in a stock exchange has to comply with the following requirements. Permission for listing should have been provided for in the Memorandum of Association and Articles of Association. Number 2, the company should have issued for public subscription at least the minimum prescribed percentage of its share capital, that is 49%. Number 3, the prospectus should contain necessary information with regard to the opening of subscription list, receipt of share application, etc. Number 4, allotment of share should be done in a fair and reasonable manner. In case of oversubscription, the basis of allotment should be decided by the company in consultation with the recognized stock exchange where the shares are proposed to be listed. The company must enter into a listing agreement with the stock exchange. The listing agreement contains the terms and the conditions of listing. It also contains the disclosures that have to be made by the company on a continuous basis. These are the listing procedures of the company. The following are the steps to be followed in listing of a company's securities in the stock exchange. The promoters should first decide on the stock exchange or exchanges where they want the shares to be listed. Next, they should contact the authorities to the respective stock exchanges where they propose to list. Next, they should discuss the stock exchange authorities, the requirements and the eligibility for listing. The proposed Memorandum of Association, Articles of Association and prospects should be submitted for necessary examination to the stock exchange authorities. The company then finalizes the memorandum, articles and prospectus. Securities are issued and allotted. The company enters into a listing agreement by paying the prescribed fees and submitting the necessary documents and particulars. Shares are then and are available for trading. Recent changes in stock exchange by SEBI. Market Regulator Securities and Exchange Board of India (SEBI) announced a series of amendments to rules related to the stock exchange. While there are no changes in the way you would trade in the stock market, some announcements after affect a section of players like foreign institutional investors and mutual funds. SEBI constantly monitors stock markets for enhancing the efficiency of both the buyer and the seller. Thank you. We end to the session.